financial models have become the most important decision-making tools in finance. FMI is the world's only financial modeling accreditation body. FMI's accreditations empower finance professionals to strengthen and validate their financial modeling skills. Learn more by visiting fminstitute.com today.
Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today we have a very special guest from Mongolia. This is Mongolia Investment Week, which is hosted by Capital Markets Mongolia here in New York, and today we're talking with Kulan Bat Erdene, who is an investment specialist on the Mongolian market and ESG investing. She is currently an independent consultant. Previously, she was an adjunct professor of ESG investing at University of Luxembourg. Before that, she was at HSBC, Schroders, and other major firms. She got her bachelor's at the National University of Mongolia and master's at the University of Luxembourg. Welcome, Kulan.
Thank you very much for having me as your podcast guest. It's a pleasure to be here.
I guess I want to go right to the headlines in Mongolia because we rarely speak with anyone who's so knowledgeable about the country here. How do you forecast the growth for the country to go on as mining seems to be stabilizing?
Yes. So just to put things a bit into a context, I think we can all agree that the global economy remained remarkably resilient, with the growth holding steady as the inflation returns to target in many countries. However, this journey hasn't been easy for major markets, and also starting with the supply chain disruptions during the pandemic and even after the pandemic. And also, the Russia-Ukraine war as well triggered the global energy and food crisis. I think despite many gloomy predictions, the world, in a way, avoided a recession, and major emerging market economies didn't suffer from sudden stops. Now, bringing it down to Mongolia in 2013, it was one of the fastest growing economy in the world, with the GDP growth of 7%, while the global average was 3.1%. And the emerging and developing Asia was about 5.4%. So as any, an analyst or professional, you want to know why, So the outperformance was largely reflects on the strength of mining exports. Mongolia exported a record high mining volume last year, and this is thanks to the border reopening with China and improved infrastructural links with China. So this was driven really by the commodity export in the country. And then one could argue that what happens if the demand declined from China's side, and which is a reasonable question to have, but the Chinese demand for Mongolian mining commodity remained quite robust despite a slowing of its own economy and also their import from Australia as well. This has been the underlying reasons of the GDP growth. And I think it's quite important to have a sustainable growth, right? How strong is that growth? I think the different institutions such as IMF and Asian Development Bank, etc., they have published their outlook for Mongolia, and it looks like the Mongolian economy is projected to grow 6.5% in 2040, and the growth is expected to sustain for the following years. That is that is something I can also agree with. Yeah.
You do? Okay. Yeah, that is, it's exceptionally, very common for emerging and frontier markets to depend heavily on one subsector of their marketplace. It's normal, but it also makes forecasting tricky.
Exactly. Yeah, exactly.
I wonder, as it is largely a mining economy, how the country is thinking about ESG governance and ESG implementation.
Yeah, so it's a good question, and this requires a lot of global trends as well as local circumstances, how it's perceived, how it's practiced, how the country is looking at ESG. So when we talk about ESG investing and green transition, energy transition, etc., we are talking about mining sector as well. It means green transition means energy transition, and energy transition means mineral transition. So we are moving from more fossil fuel based energy into more renewable and clean energy, right? So Mongolia is quite rich in critical minerals, which is required for the digital transformation, and also renewable energy, especially wind and solar, because out of the 365 days in a year, 273 is sunny. And in terms of wind, there is also like a big resource. But then when it comes to like making it, transforming it into an energy and making it a sustainable project, I think it requires a lot of effort, both by the government as well as from different stakeholders. So in terms of like financial industry, ESG is quite, like the industry is quite ahead of the curve compared to the rest of the industries in Mongolia. So there is a national sustainable finance framework, which includes, like the green bonds, sustainability-linked bonds, green loans, etc. And as per the last COP meeting, the Mongolian government has committed to spend 1% of its GDP into climate actions. And then in the banking industry, by 2030, 10% of the bank's loan portfolio must be green. And 5% of the non-bank financial institutions like micro-lending companies, they need to be green. And there is also like a voluntary ESG reporting and disclosures and, when it comes to reporting. But when it comes to risk assessment, it's mandatory. The Bank of Mongolia has introduced ESG risk assessment requirement just last year. So now all the lending activities are capturing ESG risks.
Interesting. Okay. So, perhaps we could dig into some of the more detailed things about the market. I didn't want to get too far into this, but we do have a bunch of analysts and portfolio managers listening to this, so we can do that. One of the things that a couple of the rating agencies have been writing a little bit about is the country's net external debt. Could you talk a little bit about where that is right now, how you're viewing it?
So when we are talking about the debt, we also need to talk about the ratings, credit ratings of the country. So by Moody's, Fitch, and S&P, Mongolia was rated B, which means stable for the long term. So that's one thing. And in terms of the net external debt, I think that's one of the key areas that is dragging down the rating. If this wouldn't have been considered as a risk, the rating would have been better than stable. So in terms of the net external debt, it's about 150% of the GDP at the end of last year, which is around 7 times the B median countries. Though that means it's quite high, although our 30% of this is foreign direct investment. Because, there are a lot of main mining projects like copper mine, etc. They are operating and, the underground mine is there. So that also has an impact on this. As per those rating agencies' comment, I think it is expected to be stable source of funding, the FDI, and foreign reserve coverage ratios improved for the last years. So this is the current snapshot of the net external debt.
Now that we've talked about banks and the debt, perhaps we could talk about the capital markets. So
yeah.
This is your area of specialization, so I know you're excited about it. So tell us about that.
Yeah, so capital market is quite, when I talk to my students or when I talk to my international colleagues, I say it's like 2.0 of capital market Mongolia we've witnessed in the last 3-4 years. So when the country moved from a centrally planned, communist kind of economic and political regime back in 1990, the capital market was in a way kind of left behind. So there were a lot of privatization of state-owned assets, etc., but it was done in a way that it's not sustainable, for example. So there are several attempts in the past years, but this last 3-4 years has been quite historic moments, if I can say this, in the Mongolian capital market. So there was political will. The government wanted to develop the capital market, which connects the real sector, which is like the reflection of the economy and reflection of the country. We've talked about banking. So one of the main thing was that the Mongolian financial industry was quite dominated by banking, up to 95% of the market, so which was quite concentrated. And then there was a banking reform, a law was passed, and then it required all major banks to go public, to make an IPO. So the banks are now publicly traded companies. And also the law introduces shareholder concentration, so nobody can own more than 25% 20% of the bank. And that in that respect, that kind of, boosted the trading volume on the equity market side. And, a lot of retail and institutional, the well-known, well-informed investors had quite an appetite for the equity market. And speaking of a fixed income or private credit market, there is also significant change, because previously it was all publicly traded bonds that was only available. I think there were only really limited number of securities products in the market, but now it has tripled in size, the variety of products in the last few years. And one of the main driver was that the introduction of private credit market, the OTC market. So it's regulated, but not directly by the Financial Regulatory Commission, but like a self-regulatory, industry association. So that kind of really helped companies who only rely on corporate loans for their funding resources. And since the introduction of the market, the bond issuance, I think it totaled up to $640 million USD for such a small amount of time and for such a small market. So that has been quite significant changes. And I think one of the key things that in terms of sustainability, as well as the having a robust capital market, is the public education, the investor education area. So through these changes in the market, I think a lot of the investors are better informed about what this can do for me, because unlike the US, the retail brokerage was not that big, and I think it's gonna come.
That's fascinating, absolutely fascinating. Well, this is exceptionally interesting to think about as the market evolves. It's also important to think about from an asset allocation perspective. So thank you, Kulan, for being here and informing the members about things they can think about within that. And thank you all for listening into this podcast. We don't have a whole lot of emerging markets ideas coming up. We will have an event in the fall, so please join us there at that one. Until next time, I'm Rob Rowan, and this has been Compound Insights.